Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. Inflation or recession? Take your pick. That's what's happening right now today, and I hope that you are already on the ball with what's been happening. But if not, I'm going to give you each and every step of the way. All those details right here, beginning with Powell facing choice between elevated US inflation and recession. Many people said, no way, impossible. This can happen. How could we possibly deal with something like this? The Federal Reserve would never let it go, and here we are. Surging prices put pressure on the Fed to do more to rein them in. Markets price in more aggressive action by the US Central Bank. The Federal Reserve has been pushing forward with this tightening policy, and that has been extremely frightening for those who are overexposed, particularly to risk assets. If you look at this and what has happened historically, you increase interest rates, you hammer those risk assets down. And I mean, we could see this over and over again. I mean, this happens to be the S&P 500, but you look at it all throughout and it's basically the same thing. We were riding on fumes through 2021, and now we have come down significantly. Any level of bullishness has been met by the sledgehammer, and that has been quite painful for a lot of people because they've been buying in. Oh, I'm just going to dollar cost average. It's all good. There are other strategies that people can take, okay? One simple thing, I talked about this in a short I did on my other channel. The other channel is in the top of this description. It's the Money GPS Alpha. Click on that, subscribe to it. I talked about it there, and I have talked about it here on the channel here and there. But if you simply believe that the market was going to come down over the next few weeks, over the next few months, you don't have to sell all your assets. If you want to hold, you're saying, no, I'm just going to hold long term, I'll dollar cost average. You're putting money into something you know you're going to lose money on. Like if you believe that, if you truly believe that the market's going to be really weak over the next little while, why would you buy into it? Why wouldn't you take that and buy into something much more safe and secure? Or if you want to be, on the other side, you could buy an inverse ETF. And you don't want to hold for too long, and all you're doing is reducing the pain, reducing that overall pain. That is a strategy I've talked about before, but I wanted to show you this. Stubbornly hot US inflation is fueling bets that the Fed will get more aggressive to try to cool price pressures, even potentially ditch its own forward guidance by delivering a jumbo-sized interest rate hike in the coming months. So what are they talking about here? 75 basis points. The Federal Reserve going 25, they're going 50 basis points. They never got to the 75. Will they get there this time? We'll see. At the time of this recording, the next Fed meeting is coming up fast. So we will see what that will be. Inflation is going so hot, and if they really want to cool it down, they could implement this. However, they'll spook the markets even more. So where we are at now, what I believe is that 50 basis points is the most likely scenario, and that means that, they're on track with what they said they would do. Nobody knows what will happen, of course, but I do believe it will be important to watch each and every detail. How can you do that? Simply by subscribing to the channel, hit that thumbs up, and you will be notified of when I bring this information out. I'm going to give you all that data related to the Fed, okay? So stay tuned. Bernanke says that the Fed can sidestep big recession in inflation fight. Yeah, they can do it. They can create by the way, the new thing, soft-ish landing, not a soft landing. They've done away with that, just like transitory, and you start hearing the weakness in their voice, and now it's a soft-ish landing. My goodness, these people. I don't even look at that as bad. I mean, it's the people that repeat this. I mean, there were so many individuals out there, influencers and all these things. Oh, it's going to be transitory. It's going to be transitory. Really? They also said that they wouldn't increase the interest rates. They also said that they wouldn't stop the money printing. It happened. Here we are. Fed's softish landing is possible if the supply side improves. Yeah, of course. No doubt about that. Will it? And the whole timeline there. Okay, so if it improves over the next year, we've got high inflation all this period of time for literally years. That doesn't just turn, okay, low inflation tomorrow. Not at all. Fareed Zakaria GPS, by the way, he was on. Just want to let you know, I mean, that's clearly a ripoff of the Money GPS, okay? So, change your name, please. The US economy today is a mixed bag. A recession is possible. Economists are very bad at predicting recessions, but I think the Fed has a decent chance, a reasonable chance, of what Jay Powell calls a softish landing. We'll see, we'll see. Aggressive Fed moves back in play as the yields surge on the CPI shock. So you could see it in here, just looking at the 2-year Treasury yield breaking above 3%. Now that's what's happening with the Japanese currency. I posted this on Twitter, but you can look at it at 135 to the US dollar. It's just rapidly declining in relation to its peer. And you see that higher yields in the US simply attracts the money like a magnet to it. So be aware of that. Wall Street executives can't stop talking about a recession. Look, everybody's talking about it. It's not just Wall Street. But you look at this and they give you some examples in here. Jamie Dimon is one of those, saying we're going to experience a hurricane and so on. There's Goldman Sachs. The confluence of the number of shocks to the system, to me, is unprecedented. I don't see any possible outcome other than a recession, according to PNC. You look down here, there's no real reason to be worried about a recession. There is some slowing in the picture. JP Morgan, it's certainly not our base case that there will be a recession, but it's not easy to avoid either. And that's Citigroup, and you go on and on. Okay, so there's a lot of examples down in the description under the sources. L. Ariad said that most of the inflation could have been avoided if early action had been taken by the Fed, which must now regain credibility to ease long-term inflation expectations. And that's important. He makes a good point here. You see what he's saying? Okay, they messed this one up, but if they tighten enough and get that inflation to come down, then the markets take them more seriously with their forward guidance and so on. Otherwise, things get really out of control. Now, really quickly, mortgage-backed securities. You remember what happened with that and the financial crisis, the mortgage crisis, and housing and all that? Well, because of what happened with inflation, looking at the CPI specifically, well, when that happened, is referring to this morning, but it's when that information came out this past week. It was so awful that it changed the bond market's view of the Fed trajectory, and the weakest sector broke. In bond jargon, MBS, mortgage-backed securities, went no bid. No buyers for MBS. Then a few posted prices beyond borrower demand, not wanting to buy except at penalty prices. Do you see what's happening here? The market is breaking. We need to understand that this cycle we're going through is not one-dimensional. It's not a matter of, okay, soft landing, then all we need to do is, hang on tight, and then the Federal Reserve is going to print some money, they're going to decrease interest rates, and everything's going to be okay. Good luck with that. All right, let's look at this. I mean, prices are rising everywhere. You see inflation in the terms of price, going crazy, and it looks like it's going to get worse, unfortunately, in some areas related to electricity and food prices. Record heat sears Texas, central U.S. this weekend, and also the heat is going to spread to the Great Lakes and Chicago this week. Blistering temperatures stretch from California to Tennessee. Same situation here. Texas power use tops all-time record. So we see this right now. What does this mean? It means your electricity is going to be more expensive. It means in the areas where you've got so much drought, you are going to experience, terrible yields on the farms. And as a result, less food coming out, higher prices. Okay, I hate to be the bearer of bad news. If you want some good news, I think it's all just news anyway, but you can check out my playlist. Go to my channel, playlist How To and Solutions. That's available on this channel, or check out, like I said, you can look at in the description. First things first, right there, my new channel, which has all kinds of really good tips and stuff. Smithfield Foods citing high cost of operation in California to close pork plant. So who is this? Well, it's the US's largest hog processor. Says it isn't worth doing business in the state due to higher inflation and taxes. Like, whenever you think about, pigs and stuff, or animals in general, what does this mean? It means when the business finds it too expensive, they simply shut the door because they can't. There's a limit as to how much the consumer can handle, and this breaks the back of those consumers. McDonald's shrinking menu means healthier foods are vanishing. Forget about the healthier foods. What does this mean? It means they start to go through, just like any business would do this. During this period of time, what do businesses generally do when things are getting, they see what's happening with the consumer. They see what's happening to their bottom line. They go through and they look for the things that aren't selling as well. They start to get rid of it. They cut costs. Do we need to put the pickle inside the sandwich? Maybe we can do without, because we can save 1 penny per sandwich over 1 billion sandwiches. There we go. We got some cash. You get the point. They start to cut back here and there. Okay. And maybe they won't sell the Big Mac anymore. It's just going to be a regular Mac. I don't know. All right. Bad joke of the day. Bank of America bull bear indicator. You could see it looking right now. Time to buy, right? Well, that's what some are saying. It's no doubt this is extreme fear. Is it justified? I think that's the question. What do you think? Is the fear justified? Let me know. I want to know what your thoughts are. And then this right here is related to Canada, but actually the US as well. Essentially, looking at the deputy governor, so one of the highest positions, for the central bank, a larger than expected slowdown in the housing market, amplified by the staggering debt loads being carried by Canadian households, might lead us to pause rate hikes once they enter the bank's neutral rate of 2% to 3%. Is that going to happen? I mean, I don't know, but I think it's important to understand that once the market signals that, oh, they're not going to increase anymore, this could be, I don't want to say bullish, but at least some of that fear can be, moved away, moved to the side. Okay, I think that's important. I think I've covered what I need to do today, and wanted to highlight the fact that we have inflation, we have recession, and we are coming to a head right now. We are coming to a point at which most people are unprepared and unaware. That's why I appreciate you being here today, because when you look at all the data, it's adding up and it is not good. Be prepared for yourself. Take advantage of the situation where you can. Okay, food's really expensive today. I get it. Buy in bulk. Do what you can. Grow your own food. Do the things that you can today to make a difference tomorrow. If you appreciate this information, simply hit that thumbs up button. If you want to know what's happening with the Federal Reserve in this week right now, make sure you hit that thumbs up so my video will be more likely to come up in your feed. All right, I'll see you on the next one. Take care.